How's it going, everybody? So Zeph Farouk here, and I decided to do another video on 30-minute strategy or 30-minute plus strategies. Now, for those people who like less risky trades but are willing to wait around or are willing to let the option expire after 30 minutes, this is for you. Now, another benefit to doing 30 plus trades is that you win by more pips. Usually, if you're right, you win by more pips. You have more room to evaluate whether you made the right decision or not. And on top of that, the third benefit is that you can close the option. Even if you're winning, you can close the option depending on how far into it you close it. For a profit. So you don't have to wait for the full 85% profit, for example. You can just wait for the 60% or 70%, whatever you're comfortable with, and close that option before it decides to go down, if it does go down. So those are some benefits to using 30-minute plus expiry. So what I'm going to take you through is how to determine where to place trades on 30 minutes, not using price action and stochastic, not as much stochastic. I use it, remember, just for confirmation. I just have it on the chart. I don't always use it to confirm my trades, but it is the best for me indicator, and I've gotten comfortable with this over the MACD, over the RSI. Now I do use the RSI sometimes if I'm taking a huge trade. Then I use the RSI as well to make a second confirmation, and that's a good trade. So what you want to do is, as you can see, I drew lines in, blue lines, to indicate what I think were major points of resistance and support. Now what I define by this is where visually on the chart does the price bounce off at least 2 times. Okay, so obviously none of, we have to pretend as if this hasn't happened yet. Okay, let's just say that this hasn't happened yet. These 2 days have not happened, and we're in all these days. I think it's about 7 days right there. We have to draw support and resistance based on that. So I drew one here because it had a sharp bounce, even though it did touch it over here and it bounced off a little bit briefly, and it did bounce off this as a new support, and it bounced off again, so I count that as 2 bounces. Okay, then I drew another one here because it bounced off here, it bounced off here, and here, and here, so it bounced off 4 times. I drew another one here. Now you can just trace that with your eyes and just follow where I drew and why I drew them. Okay, so now I'm going to show you something that I've been observing as of late. You can trade like this if you like, but it is a little more risky. All right. Once you place those lines in, all right. Now some of these lines we don't know if we drew them because of a future event, so we have to make sure we're not using those lines. Okay. So so this was drawn at a past event. Okay. Right here. Actually, you know what? Let's just draw them along as we go. It's probably going to be easier for you for me to explain. So let's just say we start in the first month over here. So basically, the price goes up here and it sharply bounces off. Okay. Now the price goes down here and it bounces off maybe a couple of times. So it might be safe for you to put a line over here. Now remember, like the 5-minute chart, or unlike the 5-minute chart, it doesn't bounce off multiple times all the time, all right, like the 5-minute does. But the 30-minute bounces off sharply in key points of resistance. So when it goes up like this and sharply bounces and creates a new trend for the next almost, 2 days, then that's a good point of resistance or support. So anyways, so it goes down right here, it touches the line here, touches it here, and then it breaks this line and goes down. Okay, so here another point of resistance, support. Okay, and then it breaks that old support, new resistance. It creates, old support, breaks that. It doesn't retrace as a new resistance, and it comes back here. And remember, it all depends on what the candle looks like around the area of support and resistance. If it's a long wick, then it's likely to do the bounce. Okay, so it goes down and comes up here. Now notice that when it hits this line, as soon as a green candle comes and breaks a major line of resistance or support, the next candle always closes under the closing of the previous candle, meaning you could take a 5-minute put option at a 30-minute or more level and win these kind of trades. Alright, so let's see again here, when it breaks this line, when it breaks this line here, again, major area of resistance, look at the next candle is red. Okay, and now you're waiting for it to touch again. So here, it broke this line and the next candle is red. Okay, now you'd barely be in the money for these two. This one you'd be okay. This one you'd barely be in the money. This candle opened at 137.27 and closed at 137.249. Okay, so it came really close to opening and close. Basically, open and close in the same way, but it doesn't matter. You still would have won if you caught it on the right time. So now we're looking for major points of resistance support that are new now. So see, it bounced off here, so you'd have a line over here, and then it came down here, and look at that wick over here. That signals to you that you can take a put call option for the 30 minutes. And then this previous support was hit over here. As soon as it touched, the next candle was red. As soon as it touched here again, next candle was red. Now these are good candles. These are good wicks because they're relatively large wicks. Okay, so it comes down, and as soon as it hit this support here, that was created. Where was this created? Over here, it was resistance. As soon as it hits that, now watch. Basically, all you have to do is watch what the candles look like when it hits these lines, or when it's approaching these lines. Watch what the candles look like. It'll give you a good indication as to whether the next candle is going to be red or green. So see this, the red one came, a nice wick emerged. Okay, now let me try to zoom in more. Nice little wick, next one was green. Nice little wick, next one was green. Okay? And then now you have to watch what it does again when it approaches these lines. See, so approach this line again, nice little wick, again. Okay? No wick here, it continued up. Okay? And then it breaks. When it breaks, you have to notice the candles again. Okay, nothing's happening during when it's approaching this line over here that was drawn based on previous resistance. Nothing's happening, so you're not looking at any trades. Then it goes up. There's no wick action happening here, so we're not doing anything above line. Now it's ranging, so you maybe not want to take any trades here. But then it reaches this line of old support, and you look at the wick, and you're like, okay, fine, that next one's going to be up, green. So then again it touches here and it shoots back up. Okay, so watch how the candles are working around the areas of support and resistance. It's amazing to see it. Now see, this wick emerged, but it closed far away from that resistance. So you know the next one could be a green one. So you're not going to take that trade. But then this green one comes and it closes close to that resistance, so you can take a 5-minute put. And then it touches here. Remember, this candle here closed far away from the resistance. You're still watching it. The next one was a red one with not that much of a fancy wick, but you can use your own judgment and take a 5-minute call if you like. Usually, you also notice is that if a big candle breaks the resistance or support that you've drawn previously, the next candle is usually the other color. Okay, now this is just an observation. It is not fact. And it's not 100%. All right. So, but remember, I've observed that a majority of the times this is what happens. So I'll give you a couple examples. See, this big candle came in right here and broke that support, and the next preceding candle was green. That signals to you that you can take a 30-minute or more call option and been in that money over there. Okay, and then this big candle over here breaks this strong line of resistance. Big candle breaks, and the next one is red. So you can tell that right when this closes and this one opens, you'd make a 30-minute 30-minute put option, and then so on and so forth. And then it comes back here to this old resistance, and look at this candle. Big candle, nice wick, and next one was green. Okay, so on and so forth. And then here's an example of a time it doesn't work. Well, this is not necessarily what I was giving an example as a big candle, but when you have a nice wick and it doesn't work. It goes up here, this green candle, you would think that this nice wick, the next one's going to be red if this is resistance. Now, you would have taken a put trade and that wouldn't have gone through. I mean, that's okay. You do not win 100% of the time. That's just the rules of the game. And then this broke. So what you want to do is this candle right here again, nice little wick, and you would have probably placed a call. Now my rule, if you recall, was if it breaks a line and you want to place a trade on new resistance, old support, new resistance, then wait for it to go up more than just this. See, this is such a short distance for it to go up in order to retrace down. So don't take the ones that don't retrace more up. So for example, if these green candles had gone up to here or so and then it started going down, then I would have been more confident that an old resistance becomes new support. Okay, repeat that in your head, watch it again, watch the last 5 minutes again, and make sure you get that. Okay, that's very important. So then it comes up. See, now this one came up far. This came up nice and far and retraced down. Old resistance became new support perfectly. So when it touched that red candle, touched that line, the next one was green. Okay, and this didn't work here because it didn't go far enough for it to be a properly retraceable area. So to continue, it just keeps going up and up and up. Up and up and up and up. So then, see, it reaches this resistance here on this side, and it completely breaks it. A big candle breaks it. And remember my rule: if it's a big candle, usually when a big candle breaks a strong area of resistance and support, the preceding candle, or sorry, the succeeding candle is the opposite color, which is in this case green, and you would have won that trade. Okay, so that's a very good lesson for you guys. Honestly, you can use that, and I've been using this. This is how I started making money using binary options, is through this. Just start practicing on your demo and double your account. And when you get there, put in some real cash. Put in like 200, 500, whatever you can afford, and start doing some real stuff. But you have to practice this. If you're in this group and you're not doing anything with these teachings, then you're really not going to do anything with binary options. You might as well free up the space for someone else. Alright, anyways, thank you very much. It's Farouk. If you have any questions, you know where to find us. Thanks, bye.